I hope you were able to join us for our Re-Engage in Trade session last Friday. It was a great discussion on what in the world international business looks like in this whole new COVID environment. So just as St. Louis is starting and opening up its economy, many of our international partners, countries, top trading partners are opening up their economies as well. And so it was a timely discussion with a couple of our World Trade Center board members and some of our state and federal partners as well. So come join us. These are really, really good discussions. We hope you'll be a part of them. And again, stay safe and stay tuned.
Just get started. Good afternoon. My name is Stella Sheehan. I am the Deputy Director here at the World Trade Center. And I want to welcome you to the next iteration of our Engage in Trade series, Re-Engage in Trade, which is a series we've been holding for quite a while. This is the first iteration, obviously, in light of the COVID crisis. Our topic today is commerce and COVID. What's next? And just a few housekeeping items before we get started. You will be muted for the duration of the event. If you have questions, however, please ask them in the chat section, and we will do our best to get to those towards the end of the program. We have a few minutes towards the end to address, hopefully, most of those questions. With that, it is my distinct pleasure to introduce our first speaker, Mr. Rodney Crim. Rodney is the CEO and President of the St. Louis Economic Development Partnership, of which the World Trade Center is a division. His career spans both the public and private sectors in Chicago, Minneapolis, and fortunately for us, St. Louis. And as a nationally recognized economic development leader in the region, we wanted to ask Rodney today to say a few words on how the partnership has pivoted during the crisis and how St. Louis is positioned for the recovery. So with that, I will pass the baton to Rodney.
Oh, thank you very much, Stella. This is just a real exciting kind of opportunity to share some thoughts from our panelists and hear some comments and questions from the businesses regarding re-engage trade. So we're just really pumped up that you are all able to join with us today. And as Stella mentioned, as the CEO and President of the St. Louis Economic Development Partnership, we serve as the umbrella organization for the World Trade Center, which also makes us very unique when you look at economic development organizations across the country. I'm an active member with the International Economic Development Council and on their board, which represents about 2,500 economic development organizations. With the World Trade Center, that provides an opportunity for us to be very forward-thinking in global trade and how do we collaborate across a number of different functions to make sure that we make an impact in our region and across the world. One of the things that we've been doing as a region is making sure that our economic development organizations are working together in a collaborative way. In order to do that, we have a Monday, Wednesday, Friday phone call in which we're all checking on each other and also providing each other with information so that we operate more as a collective unit instead of all operating individually. As we move forward, we plan on building on this momentum that we've put together during this time so that we can benefit as a region going forward. As we look at our own organization, in addition to the daily work that everyone does, and the World Trade Center and Mosaic and our other divisions have done a great job in continuing that work. But in addition to that work, we've all pivoted and created some cross-functional teams to deal with the COVID-19 crisis, helping our businesses recover and moving forward. I'm real pleased to say that we have a business retention expansion effort that we're working with in collaboration with our partners across the region to move businesses from where we are to where we would like to be, realizing those opportunities for success, bringing people back to work, and being able to expand on opportunities. Once again, I just want to thank everyone for being here, and I'm looking forward to, again, all the great work that the World Trade Center does. And so, Stella, back to you.
Thank you, Rodney. So our next speaker really needs no introduction in international trade circles in St. Louis, but I know we have a few people who may not be familiar. So it's my great pleasure to introduce our Executive Director, Mr. Tim Nowak. Tim has led the World Trade Center for over 12 years and has worked extensively in international markets, including Europe, the Middle East, South America, Africa, and Asia Pacific. He is a native St. Louisan and a very proud Mizzou grad, and also a 2014 Eisenhower Fellow. Over to you, Tim.
Thank you so much, Stella, and good afternoon to everyone who has joined us here today. As Stella mentioned, we have 5 terrific panelists, each with their own perspective and background in international work. The first 3 come from the business community, and each one is a longtime World Trade Center St. Louis board member. And the last 2 are important export ecosystem partners of ours from the state and the federal level. Now, I will introduce each one, and I'm going to ask for 5 to 7 minutes of initial remarks on what international business and globalization looks like as we re-engage in trade. And then, as Stella mentioned, during the panelists' comments, please feel free to ask questions in the chat section, and Stella will compile these and try to get to as many as possible during the Q&A portion that follows their comments. With that, let's go ahead and get started right away here. Our first panelist is Jeff Hurst, who is Director of International Strategic Partnerships at the Boeing Company. Now, Jeff is responsible for supporting key Boeing defense, space, and security sales campaigns in international markets. Jeff also spent 5 years based in Southeast Asia, working in the Boeing Malaysia office. And for a period of time, he was executive director of the American Malaysian Chamber of Commerce. Jeff?
All right, thanks, Tim. And is the audio all right? Okay, great. So thanks again for the opportunity today. As we were preparing for this, I started out with a joke and said, oh, no impact at all on the Boeing side. And obviously that's not the case. And so what I thought I could do is talk about some of the broader industry impacts, some of the measures that are taking place at companies like Boeing to deal with that, how that's impacted, of course, production and our supply chain, which is very much a global supply chain, and then talk about kind of the impact on my role and some of the practicalities going forward on doing international business from my perspective, what that's looked like the last few months, and what I kind of see coming across the next few months in my role. So at Boeing, of course, COVID is a huge impact on the aerospace industry. And this is on the tails of what was already a very impactful 2019 with the 737 MAX tragedies on the incidents that had very much impacted revenue on what was our highest revenue product for the company. So some of the financial analysts have called it a black swan event for Boeing. So let's see, just taking a look at some of the industry statistics. The International Air Transport Association, they measure a lot of air traffic in what's called RPKs, revenue passenger kilometers. And so those have declined already by 40% this year domestically in the US, and it's going to be a 60% global decline. And we see the recovery probably being 2 years behind the global GDP recovery. So from the Boeing perspective, we're looking at probably a couple years before air travel is back, and then even maybe another couple years before that, before we're getting back to the levels of the pre-737 MAX crisis. So it's as far as the impact then to us, of course, that means that our customers in the airline industry are decreasing orders significantly. Looking at the MAX, we have a backlog still of 3,800 737 MAX, but throughout this year, we've already had a cancellation of upwards of 300 of those. So it's, and then of course that impacts our production rates. We only are just now starting to get back in producing the 737 MAX. But then if you look at our supply chain, many of which are much smaller companies than Boeing, it's a huge impact. And so that's something that the Boeing company needs to weigh as we look at when to restart our production of some of these commercial aircraft. We need to get that going as soon as possible to help the suppliers across the world. So part of course, is going to be the driver of that is a restart of travel, both domestic and international. And that's a matter of when, as business takes off again, and as safety, as our customers feel safe getting back in the air. And that's going to be a matter of time. Although Boeing is taking part in initiatives like the Confident Travel Initiative to try to add more health measures to the flying experience. But it's going to be a matter of time. Now, the good thing from the Boeing perspective is we also have a defense business. And part of the rationale for the merger many years back between Boeing and McDonnell Douglas was that those two businesses could almost offset one another. As one would have a decline, the other would potentially have an upswing. And that's something we saw back after 9/11. But of course, the hit to the commercial aerospace industry is much greater now than back then. And so we probably will see for the first time in 10 years at the Boeing company, the revenues from the defense side of the house being higher than the commercial side. And that is normally not the case. As far as my role, so I support our international campaigns on both sides of the business by establishing partnerships with companies in a given country where we have a sale opportunity. Right now I'm working Germany and Switzerland, and on the defense side. And so those opportunities and the schedules for those procurements still remaining. We have had some slide, but it's a matter of months rather than years as far as due dates for RFP responses and items like that. And so again, we're coming to a lot of the companies that I'm looking to set partnerships up with at a time when they are very much needing to grow their business, and they're suffering. Of course, our main commercial competitor, Airbus, is going through the same issues. So a lot of our international partners are suppliers to Airbus too. So they're feeling they're really hurting, and so the value that my team can bring in setting up partnerships to support our defense sales can be really helpful. And as far as the practicalities, obviously, I'm grounded. I'm here in my house. We're not traveling overseas to have meetings with these companies. So we're putting together WebEx and Zoom meetings and trying to conduct business as much as we can, as I'm sure a lot of the AmCham members are doing the same. And so the WTC members. And so, and that also includes customer meetings. We had a meeting just a couple weeks ago with about 50 members of our Swiss customer community. And we're doing the best we can moving forward. We're starting to see some opening in some of these European markets where our local based colleagues can start having those face-to-face engagements. But I don't see myself getting back overseas until the end of the year, if that. So I'll save any other comments, though. I know we've got a few others, but it's an interesting environment. And as the cliche goes, we're getting used to the new normal.
Terrific, Jeff. Thank you very much. And I know that historically, St. Louis's primary presence with Boeing has been defense, but even here in recent years, we've been doing more on the commercial side as well. So everyone's affected, right? Everyone's affected by this. But appreciate those comments. Moving on, our second panelist is Fred Bartles, partner at Bryan, Cave, Leighton, and Paisner. Fred's practice serves businesses in a wide range of domestic and foreign matters. These clients are primarily US, European, and Asian companies. He is knowledgeable in business-related aspects of the world's legal systems, as well as in business practices and cultures of many countries. Fred has also been active in the firm's leadership, having managed at various times the firm's offices in Shanghai, Hong Kong, and Paris, in addition to 6 years that he spent in Frankfurt, Germany. He is recognized by the best lawyers in America in the area of international trade and finance law. Fred?
Thank you, Tim. Hope the sound works for everyone. Looks like it does. Thank you, Tim. I'm sure we're all adjusting to the new challenges of the commercial impact of COVID, and this is continuing to evolve. The presentation today is entitled Re-engage in Trade, and it's not going to be a surprise to anyone to hear that our clients never really stopped engaging in trade, but their activities have been greatly impacted by COVID, and the same has been true for Bryan Cave itself. Both in light of the health risks and in compliance with Mayor Crusen's March stay-at-home order, Bryan Cave's lawyers and staff have been working from their homes like everyone else since mid-March. Remote lawyering is not anything new to us, and for me personally, as you just heard Tim describe my career, all the travel I do for clients has caused me to have off-site access and off-site capabilities for many years. Thus, implementing to 100% offsite really wasn't a big challenge. In fact, I've been pleasantly surprised how seamless that has seemed to be for the entire firm, including staff. And if anything, these last 3 months have accelerated things that have already been happening in our professional world. Bryan Cave has been making the technology and other investments for years, and we've been moving to a more flexible work environment as well. So, if anything, this means a long process of rethinking those needs is being accelerated. It's been really involving things such as our office space and a reconfiguration of that space. Of course, we'll continue to be at 211 North Broadway, but in a new and continually evolving use of that space. We're also seeing a high demand for our legal services. This, of course, has adjusted to new needs, adapting to the challenges of our clients. Financing, banking, litigation, labor and employment, regulatory, commercial contracts are all examples of the areas where we've been very busy. Mergers and acquisitions has, and that's my particular most common activity, has seen a slowdown. But some deals are continuing, and we've seen extensive new activities in M&A related to restructuring and bankruptcy. Also, there have been variations by industry sector, with oil and gas and shopping malls and retail, travel and hospitality, restaurants, hotels, etc., airlines, hospitals, landlord tenants, supply chain, all being very active with our lawyers and in great need of special attention to meet these COVID challenges. Particularly companies in these sectors that possibly were already experiencing some problems before COVID are now under enormous stress. A perfect example is oil and gas. They're already having to deal with the extreme pressure from the Russia-Saudi price war. So as everyone has read, this has been a very calamitous period for them. On the other hand, there are other businesses, such as in the PPE, personal protective equipment industry, or the tech sector, that have seen a boom and have been highly active for these reasons. One of the activities that normally occupies a great deal of my professional time is M&A. As noted, we recently have seen active deals, but if they were not substantially along to being closed, they have been going into a slower gear. This is not unusual in these circumstances. We saw this a lot in 2008 to 2009, where there was a similar slowdown. One of the things that happens is the buyers and sellers end up looking at each other over a pricing void. Expectations on the potential buyers regarding a substantial price reduction have a conflict with the sellers seeing the impact of COVID as temporary and not accepting these. The money's still available and could support a very active M&A market. Even before the COVID crisis hit, many potential buyers had a large pile of cash. And the last several months have seen an enormous amount of high-grade corporate debt being issued. There's already a $1 trillion in new issuances this year, 2 times the pace of last year. And because of tax changes, many companies, including big tech, had collectively onshored hundreds of billions in cash. Add to that the PE firms, which are sitting on about $1.5 million or 1.4 trillion, not million, trillion in dry powder. there are potentially a lot of interested buyers. If you're thinking of selling and you don't have to right now, then pulling back makes sense. Valuations have definitely changed, particularly depending on the industry. And if you do not want to move ahead as a seller, then if you do in fact want to move ahead as a seller, then your reverse due diligence is going to be more important than ever. You really need to identify the intangibles that go beyond just the financial numbers and make the prospective buyers interested in this time and under these circumstances. Now, there's differences in the technology adaptation as well, because you have the things we've always seen, virtual data rooms, virtual meetings, but now you may have to deal with video walkthroughs of plants and other ways to adapt to the lack of travel and other COVID restrictions. COVID is also going to impact the negotiation and documentation. Purchase agreements allocate risk, and COVID will cause the parties to use all those tools, representations, warranties, purchase price adjustments, earnouts, indemnities, disclosures, to improve their side of the documentation. And finally, in the M&A context, representation and warranty insurance is a big deal, and that's been an enormous movement in the last few years. But now we're seeing RWI underwriters imposing exclusionary language. There are differences, so you need to know, who's offering the better terms. Moving on from M&A, another contractual issue we're seeing a lot of is an agreement argument that the agreement cannot be performed and is covered by a clause known as force majeure or act of God or impossibility, or without such a clause, an argument of frustration of purpose. Many companies have been claiming this, and you may have dealt with these in your relationships as well. There are a lot of different circumstances, and it really is a very fact-driven as well as actual contract and applicable law-driven issue. And you have to look at whether or not an actual prevention of performance is necessary or just a hindering of performance. Is it just going to be more expensive, or has it become impossible? What is the required mitigation, notification? What is the relief that can be permitted? Other issues. Another thing that we're seeing a lot, just to refer back to the M&A context, is the application of a similar context there called an MAE provision, a material adverse event. And particularly for M&A contracts that were signed before COVID hit, it's been an important issue to determine whether or not those have to go ahead to closing. Also, labor law has given a lot of new issues. There are what kind of protections need to be put in place. Do plants have to be shut down if a COVID event or a COVID outbreak occurs? The testing versus privacy conflicts. Home working has created a lot of issues. Do employees need to be reimbursed for use of homes? You would be surprised perhaps, but in some jurisdictions in the world that is required. Collective bargaining agreements and works councils need to be consulted before special work at home rules are implemented. So it becomes very complex in the labor and employment area. Other issues as well that we've seen in the international trade context, there are FEMA requirements for approval on the export of certain types of PPE from the United States. There's also fraud and abuse considerations when selling PPE. And the rush to acquire PPE, particularly overseas, has given rise to FCPA and corrupt payments issues. The Treasury Department generally has indicated that it's continuing to proceed with sanctions designations, and it's been quite clear that COVID is not providing an out, that companies don't get a pass when it comes to compliance and other rules. Tim, I'm probably close to the end of my 7 minutes. I didn't start a stopwatch when I started, so I'll wrap it up. It's hard to talk about these legal issues without kind of looking at the geopolitical forces. Many countries are still erecting border controls and limitations on travel. That's been affecting workforce. It's been affecting business people who want to travel around the world. At the same time, the EC, the European Commission, has just proposed for the first time €1 trillion fund to help build up the economy there. So there's very, very big positives on the horizon as well. We see things like Brexit still being needed to be rolled out. could be quite a big issue. And I think one of the largest things that's impacting everyone is the China trade situation. There still is not a trade agreement. We're in phase one, for instance, in the area of ag that helps right now in terms of China buying from the US, but there are a lot of uncertainties in that trade arrangement. And there's a demand for self-sufficiency. We saw France just announce a relocalizing in the car industry. So there's going to be a lot of developments. And how do you deal with these? How do you make sure your business is successful? Seems to me you need to operate with maximum flexibility. You need to develop alternative sources. You need to be alert to changes in things such as monetary markets and be ready to protect yourself in that regard. And assume a recession. It's going to last for a while. Stock market may not be telling us all that is coming. Finally, guard against your intellectual property. There are a cyber war going on out there, and you need to protect against it. That's all I have to say. Thank you.
Fred, that's terrific. Thank you very much. And I'm sure many of my economic development partners would be interested in exploring even down the road what M&A global deals really mean to opportunities or challenges here in St. Louis locally. And on the China trade deal, I'm going to let Ann just solve that at some point. Should let her figure that one out. All right, moving on. We're going to jump over to Will James. Will is principal for international tax services at BKD. Will leads BKD's transfer pricing practice. He spent 3 years in the United Kingdom gaining knowledge of transfer pricing under the Organization for Economic Cooperation and Development guidelines. Will is a frequent speaker at outside tax seminars, including the Council for International Tax Education, the Tax Executives Institute, and the St. Louis International Tax Group, where he serves as president of the board of directors. Will?
Thanks, Tim. So what I'm going to talk about today is just some of my observations that I've experienced in connection with my clients. As my clients, as you said, they're all cross-border international companies that have subsidiaries throughout the globe. So I work with companies that are inbound companies. I work with companies that are outbound companies, and inbound companies that could be a Chinese company that's doing business in the United States. And then the outbound companies would be US multinational with subsidiaries throughout the globe. And so really what I've witnessed with regard to international trade is our clients are still engaging in international trade. So as Fred said, it's not as if international trade has just stopped altogether. It's just international trade has just become a bit more challenged. And so some of the areas that have become a bit more challenged that I've witnessed with my clients are things like supply chain. So supply chain interruption is one. And then just movement of people across borders is two. So I'll just take you through some of the case studies that I've seen with some of my clients with regard to those issues. So in connection with supply chain, one of my largest clients is a construction equipment manufacturer. So they manufacture equipment, attachments that go on heavy equipment, construction equipment. And they have plants throughout the globe. So their material plants are in China. They have 2 plants there. They have 2 plants in Italy. They have plants in the UK and the US and Brazil. And what they first experienced was significant disruption because their 2 plants in China were closed down. So that was about 40% of their business, 40% of their manufacturing capacity. And so that happened pretty much overnight for them. It's not like they got a lot of warning. And so as part of that, they really needed to position themselves to try to figure out alternative solutions in terms of manufacturing the products that they could no longer manufacture in China. So they quickly shifted some of their production over to Italy, unfortunately, because we know what happened next in Italy, where there was a shutdown there. And so that led to them trying to figure out what is their next move. Their next move was to shift it to the US, which ultimately they were deemed to be non-essential. And so they had to look for alternative arrangements there. So could they shift some of their production to places like the UK, where they deemed to be non-essential? ultimately, when the U.S. shut down, luckily for them, that was when China really opened back up again. So they were able to pivot pretty quickly, have their production ramp back up in China, and even go above and beyond what they had manufactured in China before. I mean, that led them to have to do some things to comply with local rules. So that led to, for example, in China, companies are generally responsible for transportation for people from their homes to the factories. So they had to go out, they had to acquire additional buses so they could have social distancing on the buses. They also are responsible providing a meal service at lunchtime. That meant that they could no longer do that at one time. They had to stagger the people that could go into lunch. They had to change the way that they worked in the factory so they could no longer have employees on the manufacturing floor facing each other. They had to have them face the opposite directions and put up plexiglass in certain positions. So that was really a major supply chain interruption. And you would think that a lot of companies have their supply chain figured out in terms of disruptions. So you figure they have some sort of alternate arrangement, where I think, surprisingly enough, a number of companies just didn't have it figured out in terms of, let's say there was an interruption for a particular input that they needed, or even their plant was shut down. How would they deal with that? And I think that's going to cause a lot of international businesses to reconsider that. So what does their supply chain look like, and how can they, in an emergency, switch from different locations to another? Can they even go to having third parties manufacture some of their goods if need be? The other issue that a number of my clients faced is, as we've really have moved to more of a service economy, it's the movement of people has become challenged, because in certain instances, employees are no longer able to cross border. So, or if they do, they have to go into quarantine for 14 days. So I have a client that's an inbound company. Their headquarters is in Italy, and they do business in the United States, and they produce automated materials handling systems. And a big piece of their business is actually not the sale of equipment. That obviously that generates revenues for them, but it's a little bit like the razor blade, where their service business is really critical to them. So they glean significant portions of their revenue from installation manufacturers, where they're really responsible for providing service. So if the line goes down at that plant of their customer, they have to be on site to service it and bring it back up. And they really had a whole host of issues, because the service technicians all came from Italy. They really didn't have a workforce in the United States that was adept at handling the complex issues associated with their products. And so that really forced them to start to take a look at, where do they have people positioned? And they had to go out, unfortunately, in the midst of a pandemic, to try to hire people and train them on very complex systems. So I think this will really just force a lot of multinational companies to really reassess their supply chain, reassess where and how they deploy people. And then just kind of switching gears a little bit to the international tax front and what we're seeing there. So in connection with my area of focus, as you said, is transfer pricing. So that covers cross-border trade between related party affiliates. So whether that's intercompany services that cross-border, or whether that's actual tangible goods, or licensing of intellectual property, or intercompany financing. And a lot of multinational corporations, the way that they set up their intercompany pricing arrangements is such that they generally give one side of the transaction a fixed return. So in the case of like a related party contract manufacturing situations, maybe they have a plant in China that produces all of its output for the US for resale by the US. They might give that Chinese plant a cost plus. As you can imagine, they're going to encounter a pretty unwelcome surprise at the end of the year, where maybe the overall corporation's in a loss, but they're paying tax in all these different jurisdictions. So if they haven't reassessed their transfer pricing arrangements, they really need to do so, because that, as we all know right now, to use an overused phrase, I mean, cash is king, right? I mean, you hate to have a situation where you're multinational and at the end of the year you're facing a big tax bill and cash is going out the door. And in connection with that as well, what multinational corporations really need to do is they really need to look at their intercompany contracts to see if they can renegotiate the terms of their intercompany pricing arrangements. So maybe what they could do is they could share in losses. So those entities that were guaranteed profits before would no longer be guaranteed profits. Maybe they're at the low end of the profitability range, or maybe they're going to have to incur some of the losses. So that's just some of the things to take a look at with intercompany pricing. Another one is intercompany royalties. So a number of multinationals license intellectual property from the IP owner to a licensed manufacturer. In connection with that, maybe it's time to turn off that royalty or revisit the actual percentage that they're using. So in international tax, a lot of companies really need to reassess their strategy and make sure that it doesn't give them a large tax bill at the end of the year, and that might involve financial modeling. So with that, I think 5 minutes are up, and so I'm going to hand it back to you.
Thanks, Will. Thank you very
Thanks.
much. And I know you bring up a lot of really good points. We hear so much talk about supply chain and supply chain issues, but I also think you highlighting the other second parallel challenge, which is the cross-border movement and the lack thereof, and the challenges that presents. So I appreciate it.
Mm-hmm.
Moving on to one of our most important partners we have in export development and work that we do regionally and that she does statewide is Ann Bartles. Ann is the Managing Director of the International Trade and Investment Office for the Missouri Department of Economic Development. Ann oversees the daily operations of the office and its network of global offices in Canada, China, Europe, India, Japan, Israel, Mexico, South Korea, and the UAE. Along with her staff, Ann assists Missouri firms to export their goods and services overseas and provides advocacy on their behalf to foreign governments. Ann?
Thank you, Tim, and thank you so much to the rest of the panelists, as a matter of fact, for their great comments. And once again, thanks for convening us all here today for this important conversation, because, re-engaging in trade is important. Re-engaging in business activity is important. And I'd like to encourage the company representatives that are out there to make certain that they haven't had a chance to visit showmestrong.mo.gov. The recovery plan, of course, established by the governor and all of the state agencies. There's plenty of information out there to help. So, Tim, I'm going to promise to buy you back some time here, so we have plenty of time for Q&A and to make up a little bit of what Fred kind of took away. I'm kidding, Fred. But nonetheless, one of the things that I wanted to touch upon, you mentioned very rightly so, the number of foreign offices that we have, the physical presence that we have overseas. And one of the things that I just want to touch upon with regards to the types of services that we provide, of course, our flagship service, which is the agent distributor search program, as well as the due diligence that we do on behalf of our companies to make sure that these partners, these businesses are vetted, etc. All of that is done, from our Jefferson City-based team, and of course, in those locations where we have a physical presence abroad, Missouri's global footprint. The teams collectively, we have 3 teams: the Americas team, which of course is Canada and Mexico for right now. We're hoping at some point to extend that a little bit further into South America. Our Asia team, with key presence, as you can well imagine, in Japan, as you mentioned, in Korea and in China. And then, of course, with regards to Europe, the Middle East, and India. I'll share an interesting story with you. I guess I think it's kind of interesting. Beginning of March, on March the 4th, I was on a plane headed to the Middle East, actually. I was in Dubai. And within 48 hours, of course, I was back on another plane coming back to St. Louis and back to the state because of the global health situation. And just like Jeff mentioned earlier, it's in the back of my mind, when are we going to be able to get on a plane again, travel overseas, and actually do the business that we typically do? It's interesting for someone that spends a great deal of time on planes. This is probably the longest stint that I've had, in my home office here in Jefferson City. Not being on a plane and not being able to have that connectivity that we do with prospective clients, with prospective investors, and on from there. So interesting times for all of us. But to that end, the work that our teams do really are in a coordinated effort, with our counterparts and our colleagues, of course, abroad. And one of the things that I do want to make certain that we get across to the folks that are joining us today is, our teams, these 3 teams that I mentioned to you just a little while ago, they should be an extended part of your marketing efforts. They should be, you should consider them an extended part of your team specifically. And just know that, with great partners just like you, Tim, with the World Trade Center in St. Louis and all across the state, the other partners that we have extended partners all over the globe. We have the multipliers that we work with that help to extend those business opportunities all across the globe, whether that's a university tech activity, whether it's from the private sector distribution network, type activity or opportunity. All of that literally is accomplished through our teams. And like I mentioned earlier, I want to make certain that, everyone's aware of that and that you reach out to our teams. The last thing that I want to touch upon, and I was serious about making sure that we had some time for dialogue and for questions, we need to kind of take just a few minutes to talk a little bit about, kind of what that perspective is, what's been going on for the last couple of months. What are we seeing from a trade and even an investment perspective, at the state? And I can tell you that, we're getting to the next normal. I mean, some folks call it the new normal, but, for me, it's been the next normal and the next normal and the next normal moving forward. And I think that's how a lot of business, representatives and CEOs kind of view this as well, too. That having been said, at a time when they're grappling with how are they going to reopen their businesses, how are they going to space their employees within their facilities, what type of sanitation measures are they going to use, what type of employee health protocols are they going to use, et cetera, and how social distancing and one-way paths and all of this kind of comes into play. It's important to know that business still goes on. Both Fred talked about this, Jeff talked about this, and Will talked about this as well too. Export transactions continue. Our companies have continued to make sales. Import transactions continued. We see this all across the state, and we've seen it more predominantly with PPE, as you can well imagine. But more importantly, trade continues, activity continues, and just to kind of give you the perspective from the small businesses that we work with, for the month of April, May, ending today, literally at 11 a.m. when I pulled our last report, we had 131 small businesses, clients that we work with on a daily basis, that literally clocked $20 million in export sales during this time period, April, May. So and it was actually to 27 different markets, international markets. So all of that is critically important. More importantly than that, though, what we're seeing is a lot of our clients and a lot of our companies, our Missouri-based companies, they're expanding, at a time when maybe there was some, unanticipated demand that came in. Maybe there are some additional opportunities, or they were going gangbusters, just prior to everything kind of coming to a standstill. So we're seeing a great deal of that. And on the FDI side, we are still seeing deal flow. We are still seeing interest from foreign investors that are looking to actually, develop a presence in the U.S. and hopefully in the state of Missouri. So all of those things being said, there is some optimism out there, and I want to make sure that that we definitely keep that at the forefront of what's going on. Lastly, I want to touch upon kind of some supply chain issues. I'm not going to go into everything else that I really wanted to touch upon, but with regards to the supply chain gaps and issues, I want to make certain that the folks participating on the call today, that you do reach out. If you're experiencing supply chain gaps, disruptions, et cetera, please reach out to us at the Department of Economic Development. We really want to take a stab at helping you develop some solutions, look for some dual sourcing, stock supply, alternative sources, methods, whatever the case may be. We're willing to kind of look at that with you. Plus, do a little planning for the future as well, too. Whether that means automation to be able to pivot your production processes as quickly as possible. Whatever that looks like, we're in a position, and very uniquely so because of our global offices and such, to really be able to help you out in that regard. So, Tim, with that having been said, hopefully I'm giving you some time back here and look forward to some questions a little bit later on.
Thanks, Ann. Appreciate it very much. And really with the position that we've all been put into, the virtual connection is more prevalent now than ever. We were on a video call just yesterday with a company out of the UK with your team in the United Kingdom, and that we may not have jumped at in years past. And so it's really opened the doors in ways, opportunities in the midst of this disruption. So thank you to you and your team. Last is, but certainly not least, is Mr. Larry Cresswell. Larry is the Export Finance Manager for the Small Business Administration. Larry has been with SBA since 2015, bringing 17 years of experience in Missouri banking and the finance industry. He is assigned to serve as the states of Missouri, Kansas, Iowa, and Nebraska, working with the Department of Commerce, state trade agencies, Export-Import Bank, and many other resource partners, including us, to assist any small businesses looking to participate in international trade. Larry?
Hey, good afternoon, everybody. Thanks for joining us. And it's a great discussion, and I'm glad to be the closer of this discussion, though I probably won't be as effective as a baseball closer here. Obviously SBA has been in the news a lot here lately, and so I'll just kind of start with an overview of what we do, and then we'll kind of work into some of the things that are going on more recently. But some misconceptions about what we do as an agency are out there. So to kind of set that straight, what SBA does at our core is we support small businesses that need working capital primarily, and other types of financing. And we do that through lending partners. So we don't do direct loans necessarily. We work with banks and we offer guarantees. And what we do are, in essence, we're an insurance policy to the lender. If anything happens that the loan cannot be repaid, we are reimbursing them up to a certain percentage. Our domestic programs, usually that caps at 75%. In our international programs, which is what I work with, we can go up to 90% guarantee for our lending partners. And primarily on my side, when we work with international and exporters, we're looking at fixed asset financing, we're looking at export development activities, we're looking at working capital, we're looking at standby letters of credit, and accounts receivable type of financing. And that's primarily what we're assisting with. We do that through 3 separate programs. So that's just so you know, we have 3 export programs. Our export working capital program, which is primarily for helping businesses use accounts receivable, contract financing, purchase order financing, short-term financing, working capital. We have an international trade loan program, which is more for infrastructure financing, things that you can touch, you can feel, equipment, real estate, and the like. And then we have an Export Express program, which does a lot for export development, works very well with Ann's program that she works with, which we also support, the STEP program at the State Trade Export Promotions Program, and goes hand in hand with export development. So that's my main focus, is what I'm working on. With that said, as an agency, our focus has gotten a bit splintered over the last couple months, and as everyone's been disrupted, our agency is obviously been no exception to that. So the biggest part, obviously, that we've been in the news for has been the Paycheck Protection Program, so the PPP program. And that program is still ongoing, and it was meant to be a short-term program to do, as the name would suggest, to help companies pay their employees to help keep the economy spurred on. So as of today, we have roughly about $110 million left in the PPP funding. On average, the average PPP loan for the agencies has been right at $114,463. So if you did that with what's left, that would mean we have roughly about 961 loans left. I will say that what we have seen is that actually the loan size has been dropping consistently. So we do think there's going to be a little bit more mileage out of this last 110. I could see that the PPP program probably making it through at least next week with things. But with that, our lenders have really stepped up huge with this program. A lot of weight has been put over our lending partners to carry the PPP program. And unfortunately, they have not concentrated on our standard conventional programs that we normally have out there. They have, all the focus has really been on PPP, and they haven't really been focusing on our normal export programs. And I see a shift of that coming back very big here in the next month. And one of the reasons is the second part of the CARES Act, which is a debt relief option. So for any company that has an SBA loan currently, or for any company that gets a new SBA loan between now and September 27th, they will be given 6 months interest and principal payments. So they will have no interest and principal payments. It will be interest and principal payment relief from the SBA. So we're going to be covering principal and interest payments for 6 months of those loans made before September 27th. So we're going to be seeing a big increase in interest, I believe, over the next month or so, going through September, looking at our programs because of that feature. And also, I think another thing is we've talked a lot about supply chains here. And we can assist with supply chains for the International Trade Loan Program. We assist with indirect exporters as well. So we talk a lot about international trade, and you know, you make a widget, you sell it to another foreign country, that's an export. But the folks that are part of the supply chains, they're making bits and pieces that go onto a bigger piece, and then that's exported. We can support those programs through our indirect exporting initiatives, and I see that that's going to be a big increase too, with the supply chains being so disrupted over the last few months. Those folks are going to need working capital enhancements. We're going to be able to step in and help with our programs, with our guaranteed programs, and with the debt relief option. So that I see that that's going to be a big direction for us going forward. And definitely, if you have an existing SBA loan and your lender hasn't talked to you about the debt relief, get a hold of them immediately. And if you're interested in new SBA loans, talking through your lender about the potential to save that money. The third and final leg of the disaster that I'll talk about is our EIDL program. And that's our disaster loan program. So SBA, we have had this disaster loan program for multiple decades now. And it is the only program that we make direct loans to small businesses. So we don't require lending partners on this program. We actually can lend up to $2 million to any business affected by disaster. Historically, that has been, say, a hurricane, or for instance, when the tornado several years ago hit Joplin, we had a disaster office in Joplin in Southwest Missouri for a good time to help assist in those extreme disaster situations. Well, those obviously are usually maybe a couple counties, maybe no more than 15 counties. This is the first time that we've ever had a disaster that's affected all 50 states. So that program is taken on a ton of interest. It's taken on a ton of applications, but we were not quite staffed up to handle that. So the agency has been repositioning staff and onboarding new staff at an exponential rate over the last month. And I'm happy to say that that program is now starting to get functional. We're starting to fund some of those loans. People are getting their approvals. It has taken longer than we would like, but the EIDL program is out there. It's still active. Folks can definitely feel free to apply. It will take some time, unfortunately, if you're just now getting into it. But if you do have the application in the queue, you should be getting updates now, and it should be moving through the process. And just make sure to work with those folks as you can. But you know, with the agency, we're doing the best we can. It was never meant to take on this type of scope, so we're trying to play catch up there. And I think overall we're starting to close the gap on that. So that's kind of where we stand out as far as what we do and what we see kind of going forward. And I'm happy to answer questions later on with the rest of the group. Thank you, Sam.
Okay, that's perfect transition, Larry. I appreciate it. We've got just a few minutes left to maybe address one or two questions. Stella, I'm going to kick it over to you and see if you've got one teed up for the group.
Absolutely, thank you. So we are getting a few questions. One from Quinn. Will we see more supply chains move from Asia to Latin America? And maybe Anne, we'll start with you for that one.
Well, thank you, Stella. And I don't know that I'm the premier expert to talk, about the regionalization and such of supply chains, et cetera. But there is definitely a pressure, a mounting pressure, political pressure, if you will, with regards to some of the sectors moving back in onshoring here in the U.S., et cetera. And we'd love to see them here in the States. it's going to be an interesting time. I don't think anybody can predict the future right now to actually be in a position to make that determination. But we will see some shifts. We will see, a variety of things kind of affect the supply chains in general, and maybe maybe one of the other panelists from existing experience and experience with supply chains might be in a position to help answer as well.
Yeah, I mean, what I've seen with my client base, and this really started actually before the pandemic, is we've seen a number of companies that have been looking at moving their manufacturing back to the U.S. And that's for really kind of two reasons. The first being just the tariffs. They were getting just, it couldn't be profitable because of the tariffs. And then the second piece of it was just logistics. And then the third piece of it really was, as a result of tax reform, producing goods in the United States for export is only taxed at 13.125% versus the typical 21% for C corporations. So a lot of the multinational corporations are really trying to bring manufacturing back to the US because they can really capture that tax savings as well as relief from the tariffs. So that, I think that was really happening before the pandemic.
Okay, another follow-up question still on supply chain. When considering alternate supply chains, will the expertise to evaluate this be in-house, or will companies need to find some outside supply chain experts to add to their own internal staff? Where is this expertise to be found?
Okay. That's a great question.
Well, in the clients, this is Fred. In the clients I see, that varies tremendously depending on the size of the business. I would think a lot of these businesses, though, are working with in-house people, at least the ones I see. They're pretty knowledgeable. And as Will was pointing out, this is not a new topic for them. There's been issues to adjust for quite some time, particularly if a lot of your supply chain was coming out of China. We're seeing a bunch of move to India and other Southeast Asian countries, but those things are going to be impacted by COVID considerations right now. And I think the first question was about Latin America, if I heard it correctly. And certainly Latin America is getting hit hard right now by both economic factors. Look at Argentina, COVID factors, look at Brazil. So there are a lot of uncertainties, but that specific question, is it going to be internal, external? At least the clients I see, they've got good internal people looking into these things.
Okay, thank you. I think we are almost right at 1 o'clock. So just want to thank our panelists for a great discussion, and thank you all for joining us today. I do want to let you know that we will have our next session of Re-Engage in Trade on June 12th with Mark Chandler, who is a seasoned market observer. Mark will be discussing, he has actually participated in our prior Engage in Trade series, and he'll be looking into the future of globalization, the interest rates, and the dollar. So please join us for that on June 12th. And thank you again for being with us today.